What if I told you a banned Wall Street fraudster found a loophole so powerful, it let him control over $100 billion without owning a single share of stock? And what if that loophole still exists, right now, with your money possibly at risk? You're about to learn how one man secretly used a Wall Street loophole to lose $20 billion in just 48 hours, and how he tricked the biggest banks into letting it happen. This is more than a crash, it's a warning. This isn't a theory, this happened. And by the end of this video, you'll know how to spot the signs before the next collapse and protect your money from the shadow games no one talks about. If you're the kind of person who wants to understand the financial chessboard, not just the pieces, but the players and the rules they manipulate, then this channel is your insider's edge. Subscribe and turn on notifications. Welcome to The Wealth Project, where we decode the financial power plays shaping your world. The banned man's return. Now, you understand just how massive this story is, but here's what makes it even more shocking. Meet Bill Hwang. On the surface, he looked like your typical Wall Street success story. Born in South Korea, he came to America with nothing but big dreams. He earned his MBA and landed a coveted job with Julian Robertson, one of the most legendary hedge fund managers in history. Hwang became what they call a Tiger Club, one of Robertson's elite students who went on to start their own billion-dollar funds. But here's where the story takes a dark turn. In 2012, Hwang's first fund was shut down. He pleaded guilty to wire fraud for illegal insider trading. The SEC banned him from managing other people's money ever again. Think about that for a second. The man who would later control over $100 billion in credit from major banks was literally banned from the investment industry. Most people would disappear. Most people would give up. But Bill Hwang found something much more dangerous than giving up. He found a loophole. But that loophole was just the beginning. What he did next would make even the most reckless gamblers nervous. The shadow empire. So now you know how a banner fraudster got back in the game, but here's how he built an invisible empire. Since Hwang was banned from managing other people's money, he created something called a family office, named Archegos, Capital Management. Here's the genius part. Family offices face almost no regulation. They don't have to tell anyone what they're buying or selling. They can operate completely in the shadows. And that's exactly what Hwang did. While presenting himself as a quiet, religious philanthropist who hosted Bible study groups for Wall Street professionals, he was secretly building the most dangerous financial time bomb in modern history. Picture this. While other hedge funds had to file reports, face scrutiny, and follow strict rules, Hwang was operating like a ghost. No oversight, no transparency, no limits. He had found the perfect hiding spot, in plain sight. But hiding wasn't enough. He needed a weapon, and what he chose was so powerful, it would let him control more money than most countries' entire economies. The secret weapon revealed. Now you understand how he stayed hidden, but here's the weapon that made him unstoppable. Hwang's secret weapon was something called a total return swap. And I'm going to explain this in the simplest way possible because understanding this is the key to everything. Imagine you want to buy 100 shares of Apple stock, but you don't want anyone to know you own it. Instead of buying the stock yourself, you go to a bank and make a deal. You say, "Hey bank, you buy the Apple stock and hold it for me. If the stock goes up, you pay me the profit. If it goes down, I'll pay you the loss." That's basically what a total return swap is. But here's the kicker. You only need to put down a small amount of money as collateral, maybe 10 or 20%. So with just $20 million, you could control $100 million worth of stock. But wait, it gets even more dangerous. Remember how the SEC requires anyone who owns more than 5% of a company to publicly announce it? Well, since the bank technically owns the shares, Hwang's name was nowhere to be found. He could secretly control massive chunks of companies without anyone knowing. But that's not even the most shocking part. What he did next would make this weapon 10 times more powerful. The multi-bank deception. So now you know his secret weapon, but here's how he turned it into a financial nuclear bomb. Here's the most dangerous part. Hwang spread these swaps across multiple banks, Goldman Sachs didn't know what he was doing with Morgan Stanley. Credit Suisse had no idea about his deals with Nomura. Each bank thought they were his only partner, but together they were giving him access to over $100 billion. Think about this for a second. A man who was banned from managing money was secretly controlling more wealth than most countries' entire economies, and nobody knew. The banks were making millions in fees from these deals. They saw Hwang as a whale, a huge client who could make them rich. They ignored his criminal past. They ignored the fact that his bets were incredibly risky. All they saw were dollar signs. By early 2021, Hwang had turned his estimated $10 to $20 billion fortune into control over $100 billion worth of stock positions. He was leveraged at a ratio of 5 to 8 times his actual wealth. But here's where things get really interesting. What he did with all this power would create the biggest financial house of cards ever built. The reckless gamble. Now you understand the scale of his power, but here's the insane bet that would bring it all crashing down. So what did Hwang do with all this power? He made a bet that would make even the most reckless gamblers nervous. Instead of spreading his money across hundreds of different stocks like a normal investor, he put almost everything into just a handful of companies. His biggest bets were on media companies like Viacom, CBS, and Discovery. He also went big on Chinese education company GSX Decode, Baidu, and Tencent Music. But here's the crazy part. His positions were so massive that he reportedly controlled over 20% of some of these companies through his swaps. This created what experts call a self-fulfilling prophecy, because Hwang was buying so much stock through the banks that prices kept going up. As the prices went up, his swap positions became more profitable. More profits meant he could put up more collateral and take on even more leverage. It was like a financial snowball rolling downhill, getting bigger and more dangerous with every turn. But every house of cards eventually falls, and when this one collapsed, it happened faster than anyone thought possible. The collapse. So now you know how he built this empire, but here's how it all came crashing down in just 48 hours. Then came March 22nd, 2021, the day everything fell apart. Viacom CBS, whose stock price had been soaring partly because of Hwang's massive buying, made an announcement. They were going to sell $3 billion worth of new shares to cash in on their high stock price. This is called a stock offering, and it dilutes the value of existing shares. The market reacted exactly as you'd expect. Viacom CBS stock started falling, and that's when the house of cards began to collapse. As the stock price dropped, the value of Hwang's swap positions plummeted. Remember, he had borrowed most of the money for these positions. The banks suddenly realized they were facing massive losses on the stocks they were holding for him. So they did what banks always do when they're scared. They made a margin call. This means they demanded Hwang immediately provide more cash to cover the losses. But here's the problem. Hwang didn't have the cash. His entire fortune was tied up in these leveraged positions, which were now imploding. When Hwang couldn't pay, he defaulted, and that's when panic set in. But what happened next was pure financial warfare, and it revealed the ugly truth about how banks really operate when their backs are against the wall. The bank war. Now you understand how the collapse started, but here's how it turned into every bank for itself. The banks held a secret emergency meeting to try and figure out what to do. They were sitting on billions of dollars worth of rapidly declining stocks. Some wanted to coordinate an orderly sell-off to minimize damage, but no agreement was reached. That's when it became every bank for itself. Goldman Sachs and Morgan Stanley acted fast and ruthless. They immediately started dumping their shares in massive block trades, selling huge chunks of stock for whatever price they could get. They got out first and saved themselves. But Credit Suisse and Nomura were slower to react. By the time they started selling, the stock prices had already crashed from Goldman and Morgan Stanley's fire sale. They were left holding worthless paper. In just 2 days, $20 billion of Bill Hwang's personal fortune vanished into thin air. Poof, gone. But the damage didn't stop there. The ripple effects would destroy banks and shake the entire financial system. The aftermath. So now you know how the collapse happened, but here's the devastating aftermath that's still being felt today. The banks lost over $10 billion combined. Credit Suisse took the biggest hit, a devastating $5.5 billion loss that helped lead to the bank's eventual collapse and forced sale to UBS in 2023. Think about that. A 167-year-old bank gone, partly because of one man's gamble. Nomura lost almost $3 billion. Morgan Stanley and Goldman Sachs escaped with relatively minor losses because they sold first, but they still lost hundreds of millions. The ripple effects were felt across the entire financial system. Stock prices crashed, investors lost billions, pension funds took hits, regular people's retirement accounts suffered, all because one man with a criminal past was able to secretly control more money than most people can even imagine. In April 2022, Bill Hwang and his CFO were arrested. They were charged with racketeering, securities fraud, and wire fraud. Prosecutors argued that Archegos wasn't a family office at all. It was a criminal enterprise designed to manipulate the market. But here's the most terrifying part of this entire story, and this is what I promised to reveal at the beginning: the scary truth. So what's the big truth no one's telling you? That loophole, total return swaps, it's still legal, still being used. Yes, some new rules were added, but they don't stop another Bill Hwang from doing it all over again. The system still lets hidden players bet billions behind the scenes with your money on the line, and zero public warning. If that doesn't scare you, it should. So let me ask you, do you think financial loopholes like this should be legal if they put everyday investors at risk? Drop your take in the comments. I read every one, and these conversations help us sharpen our understanding of a system few people truly see. This isn't just about one man's greed. This is about a broken system that rewards high risk, hides danger, and punishes regular investors like you. So the next time you hear about a sudden stock crash, remember this story. And remember, staying blind costs money. Staying informed saves it. Because in this game, knowledge isn't just power, it's protection. If this story opened your eyes, don't stop here. These next videos waiting on your screen reveal an even deeper layer. What's coming next might change the way you see money forever. Click now to keep growing with The Wealth Project.